And good afternoon. Welcome into Market Talk for this Tuesday, January 11th. Thank you so much for joining us, making us part of your day once again. I'm your host, Jesse Allen. Thanks for being here with us, and find us online, markettalkag.com. That's our home on the web. Find all of our streaming links there for Spotify, Apple Podcasts, and so many more. Find all of our social media links there as well. The latest news of agriculture and much more. It's all online at markettalkag.com. Well, we wrap up Tuesday with a fairly quiet day across the ag sector as we gear up for Wednesday's big USDA numbers. Let's talk about all of it. Let's bring in our good friend Jim McCormick with agmarket.net joining us here today. Jim, Happy New Year to you, sir, and great to have you back on the show. How are you?
Doing well. Thank you for having me on, and Happy New Year's to you and your listeners.
Well, Jim, I appreciate the time. Let's take a look at today's action first. And really, as I kind of mentioned, we ended up fairly quiet today. Quarter beans firm around unchanged. The wheat market fared a little bit better, but overall, it just felt like a fairly quiet end to Tuesday's session as we gear up for Wednesday's numbers.
That's exactly what you could describe today, Jesse. It was a day of rebalancing and positioning for tomorrow's numbers. Tomorrow's numbers are one of the biggest report days that we have all marketing year, folks. Major revisions. What we're going to get is we're going to get revisions of planted acres and harvested acres tomorrow. We're going to get revisions of yield. Then we're going to get revisions of demand, all domestically. Then you're going to get revisions of the South America crop and potentially revisions of demand for the South America crop. And that's just part of the equation. Then on top of it, we have the quarterly grain stock survey, which kind of gives us an idea how much grain we had left over on stock as of the end of December. And sometimes we see revisions to the prior year's crop, which I think could happen in the corn market this year. And last but not least, we have the wheat acreage numbers being thrown at us. So we get a lot of data dumped exactly at the same time at 11 o'clock Central Time. And then it just pretty much is a battle of where the computer programs have, are they going to buy or sell?
Exactly. And, I'm hearing some thoughts wondering, wheat was moderately higher today, and there's some talk out there and some chatter that we might see winter wheat seedings, a surprise there to the downside tomorrow. Have you heard some of that chatter, and would you say that was part of the reason we saw more strength there on Tuesday?
I think maybe a little bit. I think some of the trade, Jesse, was probably a little bit of positioning unsquaring. I mean, if you look at what recently going on, the wheat market's just been under immense a lot of pressure since the beginning of the year, where the bean market, the corn market have been holding in relatively well, especially the bean market. And then as you saw what happened yesterday, some of the corn and bean market was under pressure where the wheat was up. So I think you're seeing a little bit of unwinding of the corn, wheat, bean, wheat spreads into this number. As for the wheat number, it's going to be really interesting to see what happens. Around here where I'm at here in Northern Illinois, I have a lot of producers telling me that they've seen more wheat planted this year than they can remember. So at least the anecdotal evidence here in Northern Illinois, we could be a surprise on the wheat number. And then something we need to remember is this is what we planted. When it's all said and done, when you look at how dry it is in parts of the Western Corn Belt, the wheat belt, specifically parts of Kansas, will that wheat come out of dormancy, and will people choose to rip that wheat up and plant something else? So this wheat number is not going to be the final wheat number.
I know as well here today, we got the CONAB numbers out. Brazil's soybean and corn crops both were reduced, their estimates there. Any thoughts on the CONAB numbers? Were you surprised at all one way or the other?
I wasn't surprised. I mean, it was probably a little bit bigger cut than CONAB usually does, but I think that is the trend everyone's looking at. The rhetoric right now, folks, is South America bean crop could be down 15 to 20 million metric tons. The corn crop could be somewhere between 8 and 10 million metric tons lost. That's both Brazil and Argentina combined. So we'll see. I think the biggest problem we have tomorrow is, will the government be as aggressive as the trade rhetoric is about the damage to the South America crop? Now, there's definitely damage being done, Jesse. You're talking temperatures right now in Argentina, somewhere between 110 to 115 degrees in some locations. And some of that corn and beans are right in that critical reproductive stage. So there's no doubt about it. The damage is being done. But I would not be surprised if the government kind of walks that number down and we don't get the big aggressive cut like some people are thinking is going to happen tomorrow.
Now, looking at where the markets sit right now, I know we have good value out there. I mean, in corn, beans, wheat, you name it, we still have plenty of value. If I'm a producer, would you recommend to them maybe getting a floor locked in for themselves here, maybe a short dated option or put or something, just to maybe get them through this report in the next couple days after, just considering all the moves we could potentially see, Jim?
I would highly recommend it. I mean, the reality is we don't know what these numbers are going to say. This report just tends to be either a limit up or limit down situation. If you have a producer, if you're a producer out there that is carrying a lot of unpriced grain. Now, if you're 70, 80, 90% sold, you may not be willing, maybe you're not too worried about the risk of the report because you're down to your risk bushels, as a lot of people put it. But if you're one of these producers that have held back, and some people have because of the economics, they just didn't want to sell that grain in the past calendar year, you might consider the January week 2 options that go off on Friday. You can buy an at the money put for somewhere around 10, 15 cents on both the corn and the beans, which will put a floor under that crop that's in the bin that's unpriced in case we happen to have a bearish report. And if we have a bullish report, that option will expire worthless. It goes off on Friday. So it is a report play, but it's one way to kind of protect equity in case you do get a bearish surprise. On the other hand, if you're a producer that wants to move some grain before the report because they like the basis and want to cut that risk, you can go the same type of situation. You can buy a call that expires on Friday. Same situation, lower risk cost, but see what the government gives us, and more importantly, how the market's going to react.
Now, looking at the numbers tomorrow, and I know you mentioned all the different numbers at the open, is there one thing in particular you are paying closer attention to possibly, or is this just one where we have to just watch and see all the numbers that come out and then take an assessment of what USDA gives us?
I think the number that I'm going to look at when it's really all said and done is where they project the ending stocks at. Right now, I think they're believing the average guess is saying the corn carryout's going to drop by about 10 million bushels and the bean carryout's going to increase by about 15 million bushels, because that's really where the rubber hits the road. I mean, it's taking everything into account. Adjustments to feed usage on the quarterly grain stock, acreage yield. So that's the number we're looking at, and we'll see if the trend is going down. If I've got to make a guess, I'm guessing the corn number, I kind of agree with the trade's estimate average. I think the corn number could get a little bit smaller. Wouldn't it surprise me if the yield drops a little bit, maybe a tenth of a bushel, especially because the Eastern Corn Belt crop just was down due to we didn't see, the good yields come in late in the year. The quarterly grain stock number, I think, could also potentially, Jesse, give us a bullish surprise on the corn. If you think back to where we were in the fall, right as harvest was beginning, some of the basis we were getting for those first fields being harvested were at historical levels, $1, $1.50, as much as $2 over the board premium, which tells me that we probably didn't have 1.35 billion bushels of old crop corn laying around. And that carryout from last year was smaller than we thought. We could see that adjustment show up on tomorrow's number. That's where you could get a bullish surprise on the corn. The bean number, the question is going to be on the demand side of the equation. The demand for beans just hasn't been as good as we would like to see. And that's got a lot of people in the trade worry that they're going to cut export demand. And they could make that decision. But where the government's got a hard question to be right this moment is how aggressive are you cutting demand? Because as South America's crop continues to falter and they miss the rains that are in the forecast next week, are we going to get in a situation where some of that demand that we thought we lost to South America is going to come back? One other thing I want to mention, Jesse, is we've all talked about the dryness issues in southern Brazil, Uruguay, Paraguay. There's another situation going on in northern Brazil. Way too much rain. They can't get the crop out. Now you're hearing situations where some of the beans are coming out of the pods. That's a situation where you could get some extra demand because the Chinese are waiting for those beans. They were assuming those beans are going to come out early because they went in early, and now they're coming out at a normal time. So that could give the opportunity for some extra demand. So that might give the government a little bit of pause on the bean export revision tomorrow as well.
And I'm also hearing some reports of some farmers in South America just planting under them soybeans, just moving them under the ground and planting their safrinha corn because they're worried that they're not going to get that first crop out in time. So that's another issue I'm hearing as well, Jim.
Well, that's it. And then the safrinha crop, because folks remember what happened last year, Jesse, was we got the bean crop in late. We got it out late. Then we got the safrinha corn crop in late, and it ran out of water, plain and simple. The water shut off, And we know what happened. And it's probably why we ended up with $7 corn last spring. So yeah, those producers are down there are really worried that what happens is that monsoon shuts down. Even though they're in La Nina right now and they're getting too much rain, La Nina looks like it could be topping out as we speak. And then if you run out of monsoon rains, that crop runs out of water at the wrong time. And then you set yourself up for a potential very bullish situation in 2022, just like we had in 2021.
Jim, I think another thing we should touch on as well, for folks who are looking at the report and looking at the markets and, looking at a big move one way or the other possibly tomorrow, just the fact of how the dynamics have changed with computers and all these numbers that are going to be out there tomorrow. It almost feels like a day where you just have to let the dust settle and then see where things kind of settle out and regroup on Thursday and Friday. Would you agree with that?
I would agree with that. I've been in this industry now, Jesse, for 25 years. And I remember the good old days when, the market wasn't trading and we released the numbers at 7:30. You had a couple hours to digest what kind of action, what were we going to do, calling customers saying, hey, this is the game plan. Right now, the reality is it's up to the computer. It's a battle of computer power, plain and simple, folks. They release the numbers at the same time. You've got a lot of computerized trading. It represents up to, some people say, 90% of a day's trade is a computer trading with a computer. So now they're programming these computers to look at a number, and then that number is higher or lower than the number they choose. And then they decide how many contracts they're going to buy or sell. And then it's not just one computer, it's multiple computers, hundreds of computers that are battling each other. And you really just kind of almost got to let the dust settle, reprice everything kind of on a new paradigm. And then what'll happen on Thursday, Friday, we're going to decide what happens next. Because remind you, this is the big thing everyone's talking about is a report tomorrow, but we have a 3-day weekend coming up. We are closed Sunday night and Monday and open back up Monday night for Martin Luther King holiday. And with this dryness issues going on in South America, you kind of feel like it's a little bit like 4th of July for the United States, where it's been hot, it's dry, but there's rain in the forecast. How do I want to position myself for, coming out of the holiday? So it's going to, this volatility tomorrow is going to be very, very violent move would be my guess. That's what history suggests. Then we're going to have to decide where we're at going into the weekend and then coming out of the weekend. And that's where, the options are something to look at. The week 2 options will expire on Friday. If you want a little bit more protection, Jesse, we mentioned the options earlier, go out further. Maybe by a February call that'll expire not this Friday, but the Friday after, which will allow you to get protection for not just this report, but also the 3-day weekend.
How about the outside markets today, Jim? I know we had the dollar breaking a little bit. Crude oil is back up over $3 a barrel as we're talking right now. Stock market rebounding. Any thoughts with what's going on in the outside markets, the energies, et cetera?
Well, it looks like the energy market's coming back. It's pretty positive of what's going on. I mean, we've had a lot of talk about Omicron lately, and the reality is, if you're in the hospital situation, if you're involved in healthcare, it's a pretty tough situation right now from what it looks like. And a lot of hospitals are full, and that's a problem. There's no doubt about it. But if you look at what's happening in South Africa, if you look what's happening in other parts of the world, and potentially what's even happening in New York right now, where these cases just exploded higher over a 3, 4, 5-week period, and then they're starting to come crashing back down. And I think there's some very good optimism when it's all said and done that we're going to be able to ride this wave out here in January, and then we get into February, March, April, we'll be on the downhill slide of this, and that potentially could bring demand back in. I think you'll see a lot of people go out on spring break. That could be bullish the livestock market as people start going back out to eat. So I think that's kind of why you're seeing the energy market kind of work its way back up.
You mentioned Omicron. I know that's some of the worry in the livestock markets right now, cattle and hogs. We've been hearing about worker absenteeism at packing plants, and it just feels like this livestock market is on tenuous footing right now. Hogs especially have seen a couple down days now. Cattle had a decent recovery today. What's your thoughts over in the livestock sector, maybe starting with hogs, Jim?
On the hogs, I think they're struggling a little bit right now. Like you said, the problem is we're having problems with downtime, change speeds, plain and simple, due to the virus taking some of the packing capacity down. We're not seeing the exports. The hog market's a little bit tenuous right now. Weights are building. Hopefully, we can get that cleared up. The beef side, I think, is a little bit more attractive in the long run. overall, because I think consumers do want to go out and eat that protein as we go into it. But the same situation right now, you're seeing the box beef prices work higher because we're just not having that kill capacity due to the lack of workers at this point in time. But I think what's going to be interesting about this on the cash market is there's a lot of political heat on the packing industry right now. I believe, the Biden administration just was out last week, with $1 billion plan to try to help out some of these smaller packing facilities and all that, due to the situation we're seeing where the box beef essentially the money made by the packers is not being passed along to the producers. With that political heat being on, maybe that'll keep the cash market a little bit more solid, hopefully.
Jim, great stuff as always. Any final thoughts you have for us here on this Tuesday before we run out of time?
Just be prepared, folks, for a lot of volatility. Use the options to kind of control your risk. And if you have any questions, go to the agmarket.net webpage. We'll be able to sign up for our research, as well as sign up for our conferences January 31st in Indianapolis and February 7th in Kansas City.
I was going to mention those conferences. You beat me to it there, Jim. You can find all the info agmarket.net. Check out their app as well, agmarket.app. You can download that on your smart device today. Jim McCormick with agmarket.net. I appreciate the time, sir. Thank you for joining us on Market Talk, and we will talk to you again soon.